Hey, Janelle Ferrer here with Waypoint Realty and
Race Robinson with Mid-Florida Mortgage.
And we are your real estate pros, and we are here to talk about credit and how to make sure, and how to make sure that you're ready and prepared to buy a home and that your credit is looking good. So talk to us about what it is that lenders look at when people are applying for mortgages, and what is it that kind of comes up, what numbers are you looking for, and all that stuff.
Yeah, so that's probably the big thing. Obviously, when people shop for a mortgage, the first thing we ask is about their credit. So the big thing is, the first thing is your score. So like for FHA, for instance, they say, oh, your credit score doesn't matter. They have this whole thing in their guideline. But every bank that we work with that's out there has a certain credit score requirement. So your credit score is going to dictate how much of a loan you're going to qualify for, the interest rate that you're going to get, and even if you can get the financing. If your score is too low, you're not going to be able to get financing.
But even in FHA, right?
FHA is all the way down to 580.
Okay, so
you can have, but banks look at more than just credit score.
Yeah.
So if you have a 580 credit score and you don't have everything else perfectly, so the magic number is 620. Ideally, in this lending world with tighter guidelines, you want to be 620 or higher.
Right.
And at 620, remember, you're not going to be getting the interest rates that you see advertised on TV.
The best interest rate.
Like
that's usually, that's kind of a perk when you have better credit.
Absolutely.
So, absolutely. So, what are some tips that you would give to get people ready when they have, let's say, good credit? You know, or what is it that you guys are really looking for along the process? Because I know it's kind of a holistic approach to lending.
Right.
It's not just credit. You're looking at stability of a job and employment and all that stuff. So what else is important when looking at credit, and what are the factors involved?
Great question. So I would say the number one thing to do is start early. Yeah. Probably the hardest thing I deal with every day is somebody calls me and says, you know, we want to start looking at a house this weekend or next weekend.
Right.
And there's very little at that point that we can do to correct anything. There are some short-term, quick, easy things. So the first thing would be, if you're thinking of buying a house at the end of this year, 3 months from now, figure out, start talking to lenders and some of them might work with, start having them look at your credit and your whole picture, because there are things that we can do with time.
Absolutely.
That even if you're an 800 credit score, we might put you in a position where we can maybe even get a little better rate because we got your ratios low, or we did something that we had because we had the time to do it. So that'd be the first thing, to start early.
Great point, because even as a realtor, there's been times where, as a real estate agent, I tell people, you know what, your credit is probably not where it needs to be. And after speaking to a lender, they've said the same thing. And so we wait about a year sometimes in order for them to get their credit score where a lender feels comfortable, and they feel like now you're going to feel better about the loan that you're going to get, the interest rate you're going to get, and the terms. So sometimes it's better to wait and be prepared.
Yeah, and truthfully, if you've got really, let's be honest, terrible credit, and a lot of people do. It's easy, especially when you're younger, to make mistakes and all these different reasons. We just went through a big economic crisis. People have foreclosures, short sales, bankruptcies, all these different things. There's a lot of times where you're going to want to hire an expert. Just like getting a mortgage or doing anything else, you want to hire an expert.
Right.
If your credit's super low, I mean, you can get credit repair for $100 a month and get somebody to actually help you dispute things and get your credit where it needs to be. And if you've got really, and you know, if you have really terrible credit, that's what you want to do. You want to hire a professional, because usually what will happen is people will call me a year later and they're in the exact same boat. They haven't done anything.
Improved anything. And so there's. And you mentioned short sales. So real quick, some people are ready to get back into it after having short sales a few years ago. What is the time span or the time lapse that has to pass from the time they short sale to when they're ready to purchase again?
And there are some caveats to this, but the general rule of thumb is 4 years for a conventional loan, 3 years for FHA.
All right.
So 3 years for most people.
3 years for most people. So 4 years for conventional loan, which is the loan that allows you to get rid of the PMI once you hit that 20%.
And go to a higher purchase, the higher range.
And the higher range, absolutely, which is over
424.
Okay,
424.
Over 424. So that's usually where that benefit goes. So let's talk about the 5 biggest factors that affect credit.
Yeah, and these, I actually, looking at my cheat sheet here because I forget the percentages, but payment history is 35%, amount owed is 35%, length of history is 15%, new credit is 10%, and the mix of credit is 10%. My experience is some of that you can't control, obviously, how long you've had credit and certain things. So the big thing is, to me, your revolving debt. The thing that I see that impacts credit for most people that are paying things on time is having too much credit out. Now, you can have lots of credit cards, but they look at if you have $50,000 in available credit balances and you've got $49,000 of that out, That's not good.
Right.
So you're maxed out.
And let's talk about revolving credit, because we assume everybody knows. But
Right.
revolving credit are basically open lines that you're paying stuff
Credit
on.
cards.
Credit cards, anything like that that's open. So it's revolving because you're consistently charging on it.
Correct.
So just to kind of, sometimes we use words and we assume that people understand if it's our industry terms.
Jargon,
So,
yeah. So,
yeah, industry jargon.
So your credit cards is probably where I spend most of the time with people. And in the short term, that is where we do help people. So you
Yeah.
go to contract, like, and somebody comes to me, they go to con, like, oh my God, our credit's too low.
Yeah.
And it's kind of late in the game. What we will do is have them pay down their credit card balances to bump up their score some. And that's a very short term thing that we can raise somebody's score 20, 30 points sometimes just by having them pay some balances down.
And that happened recently on a contract that I had. It was just by 5 points, I think, is what they missed in order to get approved, and they were able to do that within a few weeks. So it was for the next credit pool that happened the following month. So it can happen, and it's great when, again, it's being open with your lender, letting them know everything. If you hide secrets from them, you think that they're never going to find out, it is going to come up, and it can ultimately kill a deal, and you buying the house of your dreams and then it falling apart at the last minute because the underwriters found something that you held back and you didn't tell your
and
lender.
sometimes we won't catch it because, you know, as your loan officer, I don't have the same tools that an underwriter has. So you want to, I'm your conduit, or your loan officer is your conduit between yourself and once it gets into underwriting. So the more straight you are with whoever you're working with, they're going to be able to guide you. Once it gets in front of an underwriter and they've reviewed that file, there's nothing you can do. At that point, you've shown your card, so to speak, and that's what they're going to deal with. We can't do much with your credit at that point. So you want to be as forthcoming as you can during the loan application process.
And a tip for realtors, especially new realtors who aren't aware of this or it's never happened, or especially first-time home buyers or any home buyers. Thank God it's never happened, but there have been deals that have gotten messed up. I know that don't close because at the last minute, buyers get really antsy and really excited to buy their furniture, and then they take out a line of credit to purchase their furniture, and oops, it just turned over their debt-to-income ratio. And it messed it up just enough for underwriters to say, sorry, this isn't going to fly. So pulling out, buying a brand new car on credit, anything like that, those are no-nos. Don't do that until you have purchased and closed on your home. Then feel free to charge at the credit cards. But before that, that's like one of the biggest dreads because we can't control, we don't know what people are buying, so...
I haven't had that too much. There was a time years and years back where I had a guy buy a car right before closing, and the underwriter's words to me were, I hope your client likes sleeping in his car. Which was mean, but I wasn't able to get him the loan because he had bought a car and that threw his ratios out. So that can really mess you up.
And it's out of our hands. That's something that the buyers are the only ones that are knowing what they're doing with their own credit. So you do have to coach buyers because sometimes they don't know. Right.
So some of the things is, hey, you've never maybe bought a house before, you didn't know that. So this is what we're doing. We're coaching,
and that's
doing
why
what
we're
to do.
educating you guys, both real estate agents, professionals, and buyers and sellers, so you guys understand the process of what happens on both sides. So these are kind of there are dozens and dozens of articles online on how to repair your credit, how to fix your credit, how to hire people. If you guys need professionals, feel free to contact us. We have people who can help repair your credit, do that $100 a month that can help get your credit score up. The goal is to get you into the house of your dreams, get you a good interest rate, which is what Race works on every single day with his customers. And the way I work with my customers is to make sure you guys are finding your house and getting connected with the best terms and the best deal for you out there in the mortgage world. So is there anything else you want to add?
Yeah, just maybe two quick things that seem to come up a lot. These are probably the top two things. Top two. So one is that you can get your credit. The only reason you have a credit report, a credit score, is to shop.
Right.
So biggest thing I hear people say, "Well, I don't want you to pull my credit." For the first 45 days that you have your credit pulled, it counts as one inquiry. You have so whether you're buying a house, a student loan, the reason you have a credit score is to be able to shop, and the credit bureaus recognize this. So you are not going to damage your credit by having 5 or 6 different lenders pull your credit if you're within a 45-day period. And there's some, I had one guy who had like 42 credit pulls. So obviously there's some you need to be responsible. But if you find a few banks that you're really excited about and you want to work with, don't be scared, because for me to really give you an accurate quote, I really do need, in most cases, to pull your credit and take a look. And it's not going to affect anything. Even if it had been more than 45 days, an inquiry is so little, I wouldn't use that as a factor. you have pull your credit who you need to make sure you get the best deal.
Right.
So that'd be one.
And I wanted to add to that, a lot of people, and I come across this a lot, are kind of doing the Dave Ramsey thing, trying to be debt free and trying to live below their means, and that's fantastic.
Yeah.
Unfortunately, when it comes to buying a house, they want revolving credit.
Yep.
They want some kind of debt because they need to see that you are responsible enough to actually be able to make payments and purchase. Unless you're buying a house cash, then there's no need for credit anyway. So it doesn't matter. You don't need me. Yeah, but you don't need to get a loan. But that's not the case for the majority of people. So you do need to have some kind of credit being built. You can pay it off monthly, but you do need to be building some kind of debt. And I know that's kind of makes people cringe, but it's good and it's bad. So
yeah, absolutely. And then the second thing, just to wrap up, would be it's more than just your score. You really need somebody. We were talking about this before we started, to review your whole credit report.
Absolutely.
Because like disputes, if you've disputed anything on your credit report, you can't close a Fannie Mae loan, and even an FHA loan in some cases. If you have authorized users on your account, sometimes Fannie Mae, FHA, they want them taken off because it can throw your scores off. So there's different things that does take a professional to just go past your score and really analyze, because when a lot of times this stuff comes up, if it's not done correctly, is an underwriting or near closing, and as you know, that's no fun at all.
No, it's not. Especially not for the buyers. I mean, it's definitely not fun for us. We've gone this entire journey with our clients, and at the end, for something to fall apart because of something like that is incredibly frustrating. And we get frustrated for our customers as well. So our goal is to always help you guys be as open as possible so that you can get what you want, which is ultimately your home. So that's our little tidbit on credit. Thanks so much for listening.
Yeah,
if you guys have any questions, please feel free to chat. Thanks so much, Terry, for chiming in there. So we appreciate the comment there. So thank you guys, and have a great day. And again, this is Jennifer with Waypoint Realty.
Race Robinson with Mid-Florida Mortgage Professionals.
And we are your real estate pros, and we are out.
See ya.
Bye, guys.